What's up, traders? I'm very excited to make this video today because it's happening. One of my fundamental principles for trading, that of the false breakout, is happening right now in the stock market. I'm seeing this on the indexes, the SPY, the S&P 500, the Nasdaq, the QQQs. This is one of the fundamental building blocks of my trading strategy. I look to see price break key levels and then snap back in the other direction for a signal, an opportunity. This can happen from any source. I don't really care that much about what's going on in Russia or Ukraine. Neither Putin nor Biden is going to send me a text message, nor can I speak Russian to interpret it and tell me what they're going to do ahead of time. But what I need to find opportunity is already in the price. I don't even think you need to pay attention to the news right now. Yes, I said it. All you need to look as the price action. What am I talking about? Well, I'm going to look in this video at the setup itself, give a review to those that don't watch my channel regularly, why I think this is an opportunity, and then we're going to look at the ways that I think it should be interpreted. So let's go back to the January 2024 or January 24th, 2022 low. Now, if you remember back before now, that was all based on interest rate fears. Before that, it was coronavirus fears. Now it's Russia fears. And people are always trying to figure out what matters, what makes the stock market go down. I guarantee you that every day the financial media is going to have a reason to give you, but it doesn't really help you trade it in advance. What we need to look at is the key low that it made on that date. And so on that date, on the QQQ, it made a low. And then Tuesday of last week, that would have been February the 23rd, price actually closed below it on the Nasdaq. It broke the January 24th low. S&P 500 came down right close to it, but didn't quite break it. But the real cool thing, the real interesting thing happened on Wednesday night. Let's look at the Nasdaq futures because they're open all the hours. And it looks something like this. You had this dip, 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 dip. Down the Nasdaq went. Fear, 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 fear. And then on the open, Thursday, February 24th, the market ripped up higher. Why did it do that? I don't know. I can't do a poll of every single market participant. But what it did was really, really key. If we go back to the daily and we take a look, we had the January the 24th low right there. Price closed below it. There's that opening drive down there on the futures. And back before the end of the day, price had not only closed above my trigger line, but also back inside this range. Basically, price made everyone think, all the bears think, that this was going to go down to that terrible, terrible 30% correction that everyone in the news talks about to get you scared, only to come back up and leaving everyone that was short holding the bag. This is a key signal. I don't know the future. I really recommend that everyone pick up one of the trading books, Trading in the Zone by, I believe it's Mark Douglas. The fundamental principle in every single chapter is this: to internalize the idea anything can happen. I don't know what the market is going to do in the future, but I know based on the signal what I'm going to do. Because this low, I'm going to interpret as a false breakout. That means that if we actually finally come down here and break the low that we made last Thursday, that's an actual bear market to me. I know where I'm wrong to go bullish. But as it stands now, I'm going to interpret this as a false breakout to the short side, which means up. And we know where our risk needs to be. I can have my stop right below that low. That's when it becomes real. Other than that, I'm going to take a bullish sentiment. Now, I could do futures, I could do options, I could buy shares in the QQQ or the SPY. I'm not saying one way or thing to do it, but in my mind, in the weeks to come from now, I'm going to have a bullish sentiment until we hit that line in the sand, break the low of last Thursday. If that doesn't happen, I'm going to be bullish all the way back up to the all-time high. Now, how that trade looks, we're looking at the futures here. And when this Thursday bar, closed back above the low and back inside the range, you had a nice little opportunity here on Friday and then even overnight on the Sunday hour to grab it on a pullback. Now, don't be worried if you think you've missed it because it could end up consolidating in here for a while. I don't know what it's going to do. It could come back here, it could mess around. But remember, I'm not really going to say we're bearish until we break the low. Otherwise, I'm going to assume this is bullish. And that doesn't mean I have to get in now. I just need to have a bullish sentiment to look for bullish opportunities on stocks. I know which direction I want to go and set up for. That's the key. And so once we establish that that is our entry point, we know what our risk is, we can define the risk. That lets us plan for our reward back up to the all-time high. And we can almost get a 3-to-1. That's what good trading is made out of. Defining that risk and having more upside potential. Even if this is a loss, if I do that again and again, I'm going to have a profitable strategy. And the beauty of these false breakouts is it lets you define the risk, and then from there, you can decide your reward. You can even go back here and look at the last time something similar happened on the opposite side. You had a high that was established on the 5th of November, 2021, and then price tried to break it only to fail once, twice. That was the reversal. That's why looking for these false breakouts is so key because you can define your risk at the stop. If you can put a stop above that high, that spike that it made, then you can get a great risk reward on the direction that it's implying. This happens all the time. Here's an example of what I took on last Thursday. This is kind of the bonus. So I got an alert on Waste Management. Now, this is a company that I already own and I've owned for a very, very long time. They are a waste disposal company. They are a consumer staple. People should still have their garbage taken out, even if we do have a market crash. I've been watching this for a very long time, and then we finally got an opportunity. This combines two of my fundamental principles, that of 50% retracements and the spike. I'm going to draw the trend starting in February of 2021 up to the all-time high in waste management, which was about November of 2021. It's about a year's worth of movement. Price comes down on Thursday of last week. Why does waste management care that Russia's invading Ukraine? It doesn't. It was an opportunity. Not only that, but I also had a spike, which was on the shorter time frame, the 30-minute. You had lows being established in the days and trading days prior. You had the spike set up, which allowed me to get in on that morning of Thursday. I know where my stop is. It's right below that spike low, and I can take it up for profit for a swing trade. And then from that swing trade, I want to try to take it up for a longer term trade. Either way, I know where my risk is. I have very defined risk. I'm not going to be stuck holding the bag, and I've got a lot of upside potential. And that's how I like to combine together the 50% retracements that I talk about in my videos and the spikes, which are false breakouts. So watch. I'm seeing this setup in both the S&P 500 futures and also the Nasdaq futures. And so my sentiment on the stock market going forward is going to be bullish. And even if I'm wrong, I know where I'm wrong. And then that's going to be a real move to the downside. So put all those FUD people away that are bringing up crazy charts and Nostradamus predictions. Doesn't matter. You know where the trend will change now. That's going to be key for setting up real opportunity, not just talking about it and not selling advertisements. So I was very glad to bring everything together. Whether this wins or fails, this is going to be a textbook example to look for with these false breakouts. I'm going to use this, bookmark this video. I'm going to use this example, I know, for a long time to come. Either way, it's a great, great example. Thanks for watching. We'll see you in the next video, and trade wisely.